think all of these, whether it be the World Gold Council or the Silver Institute, might be very well-meaning, but I think the information is biased and understated. And it goes back to the exact same thing, how China has never reported, or why haven't we allowed a audit of Fort Knox in 70 years? So these are all good indications, but I would say the numbers are vastly understated to the true reality, which would then make this far more bullish than it actually is.
Gold has traditionally been viewed as a means of preserving wealth rather than generating it. Many financial advisors discourage investment in gold due to its lack of yield, preferring assets like the 10-year Treasury bond, which offers positive returns. However, Andy Schectman argues that this perspective is misguided. Over the past 25 years, gold has outperformed the 10-year Treasury, highlighting its true value in maintaining purchasing power, especially as fiat currencies depreciate. Central banks are increasingly accumulating gold reserves to protect against the vulnerabilities of fiat currencies. The trend remains positive despite a recent cooling in overall demand due to rising gold prices. In July, global central banks added a net 37 tons to their official reserves, reflecting a 206% month-over-month increase and the highest monthly total since January, which saw an addition of 45 tons. Interestingly, much of this gold accumulation is likely underreported. Andy points to disparities between World Gold Council estimates and International Monetary Fund reports, revealing a notable increase in undeclared purchases, particularly driven by countries like China and, to a lesser extent, Saudi Arabia. This clandestine buying behavior indicates a strategic shift away from the dollar, echoing the actions of Russia and China, which have been significant gold accumulators for years. For instance, China has a history of underreporting its gold holdings, often acquiring gold through proxy banks or refining lower purity gold domestically, which does not appear in international statistics. Many analysts believe China's actual gold reserves far exceed its official claims. In 2015, Jim Rickards pointed out suspicions that China keeps several thousand tons of gold off the books within the State Administration of Foreign Exchange, SAFE, highlighting the unreliability of official gold reserve figures. Similarly, Saudi Arabia has been making significant gold purchases, acquiring approximately 160 tons since 2022, mainly in Switzerland. This surge in gold demand reflects a notable shift in the kingdom's financial strategy, as it is moving away from its historical role in the petrodollar system. We will present clips from Andy Schectman's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
And so we talk about gold, and a lot of the financial advisors who will listen or talk to people who have portfolio in gold. Well, why would you own that? No interest. It's a positive real yield on the 10-year Treasury right now in the 6 months. For goodness sake, they don't know what they're talking about, because not only has it outperformed the 10-year Treasury for the last 25 years, but here's a cool little experiment. You see, this is an ounce of gold, even though it's an ounce of silver, and it's hanging on the bathtub, and the water drops out from under the bathtub. As you pull the plug, gold didn't go higher, the water went lower. And that's what I'm saying about the currency here. It's not that gold is going to make you wealthy. It's that it maintains your lifestyle or your standard of living. And let me paint the picture. So if indeed what he is saying is true, over the last 10 years, 7% into 72 would tell us 10.2 years, currency's been cut in half in terms of its purchasing power. Okay, if that's the case, what has gold done? Go back 10 years, gold was $1,200. What's it today? $2,660. It's gone up more than double. So it's retained its purchasing power, not by it hasn't made you wealthy. It's gone up a little bit higher than the dollar has fallen. And so that's the whole idea with buying gold and silver. When I talked about it is wealth, it's not about becoming wealthy. It is wealth. Yeah, it's outperformed a lot of investments, and it's done very well, but it's only just really kept up with the falling of the dollar. And I just want people to understand that as we talk about gold and silver, as I always talk about it. That's really where I'm coming from. And I think it's an interesting way to look at it. And you go back Look at the price of a house in 1960 versus what it is today in the number of ounces of gold. You go back to Roman times, you go back as far as you want, and it's the same thing. So, anyways, I just thought it was a neat thing that it worked out almost exactly the right way over the last 10 years. Look, the Western currencies are inflating away and they're weaponizing. So why would any of these other countries that are not G7 friendly have any interest other than having no other choice to to transact business globally, at least for now? Why would they want to hold dollars or euros when weaponization and inflation are par for the course? So, you reap what you sow, as far as I'm concerned. If I had to argue, I'd say much of the information that the World Gold Council gets is fugazi. Like, for example, China. They tried to tell us they weren't accumulating gold. They used to keep their gold numbers pegged around 1,200 tons for years and years and years, yet they produce more gold than anyone in the world. If gold is accumulated by the People's Liberation Army, it's not reported to the IMF. If it's purchased by the PBOC, it is. If it's purchased by a proxy bank on behalf of the PBOC, it's not reported to the IMF. If it's purchased directly from the refiners by the PBOC proxy banks or in South Africa or Switzerland, it's not going to get reported to the IMF. And if gold is under 995 pure, it won't get reported to the IMF. Think of what they're doing with silver. I'm sure they're probably doing with gold too, where they're flying around and buying doré and concentrate, which is not pure, and then they are refining it at home. That's not getting reported. I mean, and they're the second largest producer of silver in the world, and they're doing this. So when we talk about their efforts to hide how much silver they're accumulating, they're doing the exact same thing with gold, as are many of these countries. Look at Saudi Arabia. Saudi Arabia purchases 160 metric tons and tries to hide it, but the Swiss import-export numbers caught them. Well, if they had done it through a sovereign wealth fund, well, they probably would have got away with it. Anyways, the bottom line is that I think these numbers are a good indication, but I would say massively understated.
On Wednesday, the Federal Reserve made a bold move by cutting its benchmark interest rate by an unusually large half point, signaling a dramatic shift after over 2 years of high rates designed to combat inflation. While these elevated rates effectively brought inflation down, they also significantly increased borrowing costs for American consumers. The recent rate cut reduced the Fed's key rate to about 4.8%, down from a 2-decade high of 5.3%, where it had been for the last 14 months. This period of high rates helped tame the worst inflationary surge in 40 years, with inflation dropping from its mid-2022 peak of 9.1% to a 3-year low of 2.5% in August, nearing the Fed's 2% target. However, Andy Schectman highlighted a key concern: the market's reaction to this move. Shortly after the Fed's decision, longer-term bond yields began to rise. This reaction suggests that global investors are increasingly wary of the U.S.'s escalating debt levels and uncertain economic future. If confidence in the U.S. economy continues to erode, there could be a surge in demand for safe haven assets like gold, driving its price even higher.
Of gold holding up, it's held up in the face of positive real yield for the past 2-3 years. It's held up, or 2 years anyway. It's held up in the face of a strong dollar, and it's held up in the face of declining ETF outflows, as we've seen, like you're skiing down the Swiss Alps in terms of outflows. And now we're seeing the ETFs just start to pick up again, which is for the first time in 2 years. You're seeing reports like on Goldman Sachs that their trading desk is being inundated with gold requests, and the ETFs are starting to pick up. At the same time, we're seeing Powell pivot by 50 basis points. And they've been touting all along such a great economy and strong labor market. We know that's a lie, with the revision of over 1 million jobs between the 200 or 300 they revised during the year and the 818,000 they revised after the year. We understand that it's a lie when they tell us that the CPI is 3.3% or whatnot, and John Williams tells us it's much more. And so pivoting in the face of all of these lies, when they tell us that they feel confident that they've reined in inflation, yet they're 65% away from their target of 2%. It's a lie. And yet it, to me, speaks to the fact that they're very concerned. Now, as far as gold, We've had outflows on the ETFs. We've had a positive real yield. We've had a strong dollar, and we've had massive central bank buying. Now, all of a sudden, you have ETFs moving up and you have yields moving down. And you have a realization by the world that, all is not well. And I say that to you because immediately after he lowered the rates by 50 basis points, the bond market, the back end of it sold off, meaning rates went higher because the world is saying, at what point do we get tired of a country that's going as deeply into debt as you are, with all of the other issues that we've talked about ad nauseum, and at the same time, you now have the hubris to actually lower rates. They should have never lowered rates. They should have continued to raise rates. They've never even squashed the inflation bug, which is only going to get worse and worse and worse. Now, you look at that in terms of the price of precious metals, that hasn't even been fully priced into the equation yet, as far as I'm concerned. The American public has been largely asleep at the switch. And if we see a broad participation increase, as we've talked about forever, the 0.5%, if it increases to 2 or 3 or 4%, as paltry as that sounds, represents a substantial increase in demand. I don't think that the markets have even begun to price in things such as the rolling out of a BRICS settlement currency, such as the American participation. And there's an article that I just read by what's his name? Kuz Jansen, I think it is, and he was talking about how all the BRICS nations countries are accumulating lots of gold in those that are tied to Project Enbridge. Well, no doubt, and we've talked about why they've all been bringing it back and why they've all been buying. We find Saudi Arabia, who's straddling the line here, accumulating 160 tons of gold. Well, who cares, right? Well, the people care because they didn't report it through the normal chains like through the IMF, and instead it was the Swiss import-export numbers that flagged it. They're straddling the line. They've become full participants in Enbridge, but kind of hedging about their full participation in BRICS. They don't want to upset the apple cart, but the apple cart is going to turn upside down.
Gold prices have surged in 2024 due to strong demand from central banks, retail investors, geopolitical tensions, and Federal Reserve interest rate cuts. Central banks are diversifying away from the dollar by purchasing gold at unprecedented levels, while retail investors seek safe haven assets amid market volatility. Analysts predict that gold prices could surpass $2,700, with some forecasts suggesting they may reach $2,800 or even $2,900. In the comments section below, let us know your thoughts on Andy's analysis. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.